Hi everyone, good afternoon and welcome to Market Phataphat. I'm Avan Dabash. With me is Vinny Motiwala. We've also got Cheryl D'Souza on board. We're 50 shades of greyish blue today. But that's not the shade on the market today. Thankfully, we did see that one day of a bit of an aberration, but it looks like it's all blue skies right now because we're holding out at the highest point of the trading day or close enough at 18,186. You've got the Sensex powering through with a gain of about 0.5%. The Nifty Bank Index as well. It's been nothing short of a stellar month of April for the Nifty Bank Index. And today as well, 173 points being added there. Just taking stock of individual movers then. And here are some of the stocks that are really lighting up the screen. General Insurance, for instance, you've got New India Assurance doing very well. Something like an MMTC that's active. Chola Investments, we'll be getting you all the news and updates. M&M Financial, a buzz in trade today. Timken as well is active. Take a look at ABB, giving a solid thumbs up to the numbers. On the flip side, Petronet LNG loses out. RITES is in the red. SIS down and out. Endurance Technologies and Aavas Financiers. Those are some of the stocks that are under a bit of pressure this afternoon.
Absolutely, and we'll cover all these stocks, I believe, some of them at least in detail on this next 1 hour as well, where we'll take us through all the stocks buzzing in trade on the back of news flows and on the back of technicals as well. On the technicals, we have Kunal Bothra joining in with us, while from the research team, we have Vamakshi as well as Ashesha joining in with us. And very good afternoon to all three of you all. And I'm going to start with the first stock. Let's talk about Titan. They reported their numbers post-market hours. When you look at it, almost in line, you could say the numbers have come in because revenue was above, but a bit pressure we saw coming in terms of the margins of the company. When you look at the margins, they are at 10.76%, which is flat on a year-on-year basis. The jewelry segment that has seen a strong growth of 32%, watches, eyewear, the emerging businesses that have seen a strong growth as well. So keeping an eye on that. Now in terms of the highlights that we've gotten also in terms of the con call as well as the management, the customer demand was weak in the month of March, but yes, and the first half of April as well, mainly due to the volatility in the gold prices. Now in the second half of April, they started seeing a bit of an improvement coming in due to the festive demand, and that has continued and seems to be the company seems to be well placed in the month of May and June as well. Jewelry EBIT margins are at 13.7% for FY23, which is higher by 100 basis points, mainly on account of the diamond inventory as well as the benefit of the custom duty as well. The company also believes that the jewelry EBIT margin in FY24 could be in the range of 12.5 to 13%. So all in all, a decent set of numbers that has come in from the company. Stock is just holding on to gains of 0.6% in trade. But let's go across and listen in to what the management had to say as well. We did have the MD of the company, C.K. Venkatraman, joining in with us. Listen in to what he had to say.
We had announced in May 2022 a 5-year plan for most of the businesses of the company. 2.5x for jewelry, 10,000 crores by FY26 for watches and wearables, many thousands of crores for international, 1,000 plus crores for Taneira and all that. And when I look back FY23 actual achievement, we are very much on course for that. The gold price related volatility, gold price volatility and the slowdown in demand as a result of that. But I'm just sort of restating that these time frames are way too short while the markets look at it. But we also keep telling the market to look at, because obviously the valuation of a company like Titan or any company, FY23 has been exceptional in terms of sales growth, profit margin expansion, market share gain, customer experience standards, every which way, and therefore we are totally on course for our FY24 ambition as well as FY27 ambition. Total share of the organized sector within the jewelry industry is also dramatically increasing. In every city, in every town, people are wanting to buy brands. Now, some of them will end up buying brands which are our competitors, some of them will end up buying Tanishq. So therefore, the overall opportunity for the branded segment is exploding.
All right, that's the management of Titan, but let's move on and let's talk about REC. And this particular account just saw a good uptick in today's trading session. 3.4% uptick is what REC logged in today's trading session. Highest in nearly 6 years is where the stock was perched at. Right now, is given up most of those gains, trading higher by about 0.9%. The company's the company listed about $750 million worth of green bonds on GIFT IFSC stock exchanges. The issue saw an oversubscription of nearly 3.5 times from 161 investors. The move will contribute to India meeting its commitment towards the climate action plan, and over 87% of the transaction in the issue have been allocated to fund managers, asset managers, as well as insurance companies. This is as per NEC. On back of this green bond listing on GIFT IFSC, you saw REC see a good jump. Right now, cooled off from those elevated levels, nevertheless holding to gains about 0.9%.
All right, and speaking of the charts of REC, let's get into it in greater detail then. Kunal, let's talk about the move that we've witnessed over the last 6 months or so, quite steady from 115, 120 to about 137. Where does REC go from here?
Well, it should ideally go up higher, much higher from current levels where it is trading right now, because the stock has confirmed not a short-term breakout, but it's a huge breakout on the quarterly charts for REC. And this comes after years of consolidation. And we're not talking of 3, 4, 5 years, but even 9 to 10 years of consolidation for REC. So I think the entire power space looks attractive. The PSC index have been showing very good strength as well as demand. RSC, PFC, many of these power finance names have done reasonably well over the last 1 or 2 months. But then the breakout for these charts are now not just short term, but more on the longer term basis. So would be bullish on the prospects for REC Limited specifically, and would expect the stock to go back towards levels of 150, 160, possibly in the next 1 to 2 months.
Move right on then. REC aside, let's focus on stock number 3, and that's Dabur. Street is closely watching out for its quarterly performance, and we're expecting revenues to come in higher by about 6% at 2,671 crore rupees. The profit is seen at 360 crores in this quarter, and we're expecting this time around that EBITDA could be a little bit flattish, about 459 crores. Margins may contract, and that's largely on pressure of currency headwinds in the international business, as well as the increased ad spends that could lead to some short-term pressure on the operating margins. So that's why you've got margins expected at about 17.2%. Meantime, growth in the domestic business would largely be driven by the food business, health supplements and hair care. That could see a little bit of a subdued performance this quarter. Watch out for the operational updates on outlook in the rural markets, ad spends, demand for the juices category, and what the demand trajectory is across the board. Grabber ahead of its earnings, flat at 536.
Okay, let's move on to stock number 4, and we have Cholamandalam Finance. Vamakshi, why is this one in focus today? How about the earnings side?
Well, Vinny, a strong set coming from Cholamandalam Investment Company, and we also have the stock hitting an all-time high on the back of its numbers. When we look at the Q4 numbers, net interest income saw an uptick of 29% on a year-on-year basis, while PPOP was up nearly 40% on a year-on-year basis. PAT is up 24%, and we're also seeing that the provisions have declined from 159 crores to 114 crores on a sequential basis. The NIM stands at 7.8%. Now, definitely this is down nearly 30 basis points on a year-on-year basis, but more importantly, on a sequential basis, the NIMs have picked up by almost 20 basis points. Disbursements are quite healthy, 65% on a year-on-year basis growth. AUM stands at 1,12,782 crores, again a 36% year-on-year growth. Now, they had given a guidance of around 27 to 30% in the third quarter itself, but they have managed to surpass this AUM guidance as well. The asset quality has also improved, with gross stage 3 declining and net stage 3 also seeing a decline. Now, we also have a note that came in from JP Morgan. They believe that the premium can sustain in the near term, and in fact, they've upgraded their rating and hiked the target price. So, given these factors, Cholamandalam Finance in focus.
All right, and that is the reason why Cholamandalam is in focus in today's trading session. But let's also hear out what the management had to say when we actually connected with them in order to understand their numbers better.
Again, the COVID too had been the period of aberration with regard to the asset quality across products, and it is the same with regard to many of the other players in the market also. Progressively from the peak of that level, we have been bringing down the NPAs and the delinquencies both in stage 2 as well as in stage 3, and we have already come to the levels of the pre-COVID NPA numbers. So we will work further to reduce this, but I think we are fairly where we should be, considering the mix of the customer profile that we handle and the portfolio size that we are working with. So we need to make sure that this is controlled, and there will be cyclical movements of this. Like for example, in any Q2, Q1 and Q2 of any year, there will be a slight increase in the NPAs because both from because there are inauspicious months and there will be lower economic activities in the first 2 quarters. And once the festival season starts, you will have significant action on the ground where people earning potential becomes stronger, and so their servicing capability becomes much more better.
All right, that's a stock that's certainly a buzz in today's trading session, but loads of newsmakers, which makes our lives a lot easier. So let's take it then to the next stock. HDFC as well in the spotlight ahead of earnings. What exactly is the street working with? Ashesha joins in with the poll. Ashesha?
Well, yes, decent set of numbers are expected from HDFC this time around. In fact, net interest income is expected to see an uptick of about 8.7% on a year-on-year basis. As far as net interest margins are concerned, they are expected to remain stable, or we could see marginal improvement on a year-on-year basis. Let's also talk about profit after tax. We are expecting 3,800 crores of PAT, which will be an uptick of about 3% on a YOY basis. AUM, meanwhile, is expected to see an uptick of about 12% on a YOY basis. Individual loan growth could come in at about 3% on a sequential basis, while non-individual loan book could grow by about 2% on a quarter-on-quarter basis. Expectations on home loan demand, outlook on margins, and any commentary on merger will be the key monitorable. So keep an eye out on HDFC. It will be reporting its numbers anytime soon.
Okay, let's move on. And Kunal, Poonawalla FinCorp, how is this one looking on the charts? What are the targets that we should keep for this?
Well, just week after week, the stock gains a lot of strength for itself. It's commendable to see the recovery the stock has shown from 273 to 75 levels, from where we started to recommend first for Poonawalla FinCorp. The stock has now gained strength. It's crossed convincingly about the 300 mark. In fact, the last I had seen, the stock was almost at 333 levels for itself, which means a very good recovery for Poonawalla FinCorp over the near to medium term. My sense is that this could be a start of a very strong uptrend, which is here to sustain from a longer term play. So the sector is doing exceptionally well. The stock looks quite strong in terms of the charts. I believe that the setup over here is to go long, as well as look out for holding the stock from a medium to long term play. Extremely bullish on Poonawalla FinCorp.
Let's move on and talk about AstraZeneca Pharma. Now, this one is in focus because they've received an approval from the US FDA. This is mainly for a cancer treatment drug. To take us through more of the details of this, in terms of this, AstraZeneca Pharma has actually received a clearance from the Central Drug Standard Control Organization to import and sell trastuzumab, which is also called as HER2, which is used for the treatment of HER2 positive breast cancer treatment, and that is why we're seeing that the stock has been buzzing in trade and almost trading at the day's highest point as of now, up almost 1.5% as we speak.
All right, moving on then, let's talk about Tata Power, and that particular counter is in focus in today's trading session on back of a note that's coming from CLSA, where they have actually gone ahead and cut the target price for Tata Power. What CLSA is actually saying is the fact that the coal collapse will be hurting the company, and they've cut the target now to 189 rupees per share from 196 rupees per share, as they have cut their EPS estimates by 10 to 11% on collapse in seaborne thermal coal prices, which contributes the lion's share to its earnings. So on back of this, you have Tata Power that is in focus. They're also saying all catalysts of war-led coal price spikes and passive investor support and a retail frenzy are behind us. Therefore, they have a sell rating and a cut in the target price as well. That is Tata Power for you. That is in focus on back of this news.
All right, let's move right on then and discuss the fertilizer stock. And Kunal, why Chambal for?
So the stock on technical terms has formed an inverted head and shoulder pattern. The breakout for this pattern is around 290 to 93 mark for Chambal Fertilizers, and the stock has gained very good momentum post that. It's moved up to now 300 304 levels on the intraday time frame. So it looks very attractive as a setup. Coromandel, RCF, and I think most of the other names in the fertilizer pack have also been looking quite strong today. Coromandel, if I'm not wrong, is up more than 3.5%. So I believe on the back of it, Chambal Fertilizer also looks very attractive. I would expect that the stock could probably head towards 325, 330 range over the very near term.
What do you feel?
All right, let's move on then and focus in on Petronet LNG, a result candidate, and run you through the numbers. The consolidated revenue from operations came in high by nearly 24% on year to 13,873 crore rupees. The company's profits were down 22%, and that clearly is what the street is reading into, 619 crores versus 791. Margins as well contracted by 370 basis points to about 6.8%, and you've also got the EBITDA, which came in lower by 19% at 942 crore rupees versus about 1169 crores just last year. The company recommended a final dividend of 3 rupees per share. So on a year-on-year basis as well as on a sequential basis, there's been a disappointment in the earnings, as on a sequential basis as well, revenues are down nearly 12% with EBITDA at 943 crores, down close to 44%.
Okay, let's move on and talk about GR Infra. Mamakshi, what is the news for here today?
Well, when we look at this counter, this has seen a dip of almost around 14% when we look at it on a year-to-date basis. But today, the stock is surging in trade after it has emerged as an L1 bidder for the tender invited by Ministry of Road Transport as well as Highways. Now, this order has come in for the construction of 4-lane highway on a hybrid annuity model. That is an HEM model, and this is in the state of Uttar Pradesh. Now, the bid cost for this project is 737 crores, and on the back of this news flow, the stock is surging higher in trade today. Over the past 5 days, the stock has seen an uptick of 3%, and today the stock is up almost 2% as we speak.
That's GR Infra for you, but let's move on. And Kunal, why Vectus Foods? Are the charts still indicating or flashing a bullish trend?
Well, absolutely yes. I think you guys know that even previously we flagged off Vector Foods that the stock has given breakout on multiple time frame charts. It's moving strength after strength, so it's very interesting to see the stock making new highs on a regular basis. Earlier breaking past about the 550 mark, 600, and now it's nudging as well as nearing towards the 650 levels. So I believe that this momentum continues for the stock price. It's made a fresh lifetime high for itself, I think yesterday or today, and looks very attractive. My sense is that the stock could be in for more uptrend over the near to medium term. Traders who have been buying these stocks as well as holding these levels or holding the stock should continue to hold on.
All right, let's move right on then and discuss another buzzer in trade today. Ashesha, KEI Industries.
Well, yes, this is on the back of a brokerage note. Jefferies, in fact, has come out with a note where they are maintaining their buy rating on the stock, but they've hiked the target price to 2,305 rupees per share from their earlier target price of 1,915 rupees per share, which means Jefferies sees a nearly 25% upside from the current market price. They say higher revenues in the quarter gone by were offset by lower margins, and order book meanwhile saw an uptick of about 47% on a sequential basis, and this lends visibility to their institutional business. They also say that retail segment continues to show strong footing. So on the back of this brokerage note that has come in from Jefferies, where they've given a target price of 2,305 rupees per share, the stock is buzzing in trade today. As we see, the stock is gaining over 2%.
Let's talk about LTI Mindtree. This one is in focus on the back of a brokerage note that has come in from Morgan Stanley. Now, the management, after this management meet, Morgan Stanley is maintaining an overweight rating on the company, given a target price of 5,250 rupees per share. What is in terms of commentary that they're getting in, that the management of LTI Mindtree seems to be confident in FY24 revenue growth guidance, despite the tepid growth that they've seen in terms of expectations that we have for Q1 FY24. Management seems quite bullish on order intakes, reversal on spending freeze and synergy momentum as well. Levers are in place to return to the pre-merger margins in FY24, and M&A is a strong focus area. This is keeping Morgan Stanley positive on LTI Mindtree. As of now, the stock is not doing anything exciting, down with cuts of 1% in trade.
All right, let's move right on then to stock number 15 and Kunal discuss AB Capital. At its 52-week high, already seen a terrific run-up in the last 1 month. What makes you confident that it has the legs to go up further? What do the charts look like?
So again, strong momentum for AB Capital. Week after week, the stock has been building up to its price uptrend. Now it's interesting because the stock has formed a bullish flat pattern breakout in the daily charts. Flat patterns, they generally have very strong strike rates or a propensity to try and complete the patterns on the upside, and we've seen historically for many stocks that when a flag pattern gets formed, we expect the stock to get into a trending mode rather than just any kind of a small rally or a short-term rally. So I believe AB Capital is exhibiting all of those qualities. Looks very attractive on the charts from a medium to longer term play, confirming a breakout on multiple time scales. I would expect the stock to go much higher from current levels. The near-term targets which are flagged off from a trading play is at 180 for AB Capital, but my sense is the stock could now come back into a zone of 190 to 195 also pretty soon.
All right, let's shift the focus and let's talk about First Source because this company just came out with its earnings a short while ago. If you look at their PAT, it's coming low by about 10.5% on a quarter-on-quarter basis, coming in at around 141 crore rupees against 158 crore rupees. If you look at the revenue, it's seen a marginal uptick on a sequential basis. It's coming higher by about 3.4% at around 1,557 crore rupees against 1,505 crore rupees. If you look at the stock price, it did see a spike up when the company reported its numbers, but now it's cooling off from those elevated levels. Maybe there is some devil in the details for this particular counter. 0.3% downtick coming in for First Source as we speak.
All right, let's move on then. Lots of numbers, so lots of result reactions as well that are playing out. Let's focus in on ABB. It's been nothing short of a stellar set of numbers that the company reported on all parameters. Let's start off then with the revenues, which came in at 2,411 crores, above street expectations, largely led by motion, electrification and the process automation segment. The adjusted profits at 245 crores did come in 6% higher. You've had margins as well, which were above street expectations at 11.8%. Meantime, the EBITDA as well at 285 crores was healthy. Margin improvement came in on the back of better price realization, volume mix and better capacity utilization as well. Profits in Q1 2022 included an exceptional gain from the turbocharger business. The order inflow has remained strong, 36% higher on year, 3,130 crores, with the order backlog standing at 7,170 crore rupees. So that's ABB for you. Street clearly cheering those numbers.
Also, let's go across and listen in to what the management had to say. We spoke to Sanjeev Sharma, MD and country head, as well as the CFO, Mr. Sridhar as well. Listen into what their view on those numbers and outlook going forward.
In terms of the market formation, we still see the same robustness as we have been experiencing in last few quarters, and we have no reason to believe that this kind of momentum in the market continues. I think as far as the quarter-to-quarter concern, the order strength, I think that keeps varying because different customers have different cycle of placing those orders. So we will see how quarter two plays out. As far as quarter one was concerned, I think we are quite pleased with it.
Moving on, Ashesha, IEX, why is this one in news today?
Well, yes, IEX came out with operational data for the month gone by. Volumes for the month of April stood at 7,928 MU, which is an uptick of about 6% on a year-on-year basis. As far as pricing is concerned, prices during the month of April were at about 5.41 rupees per unit, which is a decline of about 46% on a year-on-year basis. Remember, in April 2022, prices stood at 10 rupees per unit and now they've come down to 5.41 rupees per unit. As far as their market share gains are concerned, company says that they continue to maintain their nearly 100% market share in the collective transactions. Let's also look at management commentary then. They say that increase in power demand is expected in the coming months. They also say that increase in power demand will help increase in supply side liquidity due to improved coal supply. This will lead to competitive prices and higher clearance for DISCOMs as well as other open access customers. On the back of this operational data that has come in for the month of April, the stock is in focus today. In fact, as we speak, it is holding up with gains of nearly 1%.
All right, you have it. That's the view on IEX. Tell you what, we'll slip into a very quick break then right here on the show, but we've got lots lined up when we return. All the buzzers and newsmakers coming right up.